Today in the grain market, soybeans fall. Some of those holding long positions did head for the exits as the USDA put out a relatively neutral report and didn't give the bulls anything to really sink their teeth into. Also, the Brazilian real is really strong, and that means prices were much higher, and so producers were aggressively selling, some of their stocks, which definitely is going to put some pressure on our markets as well. Option volatility also did contract. Certainly, that always happens as the markets move a little bit lower, and we see soybeans today end up down 31 cents, a pretty big move as of late. We haven't seen that in quite a while. That being said, corn was lower as well. I think follow-through selling. Now, corn was lower yesterday. Now they had follow-through selling again today. However, they do remain in that same channel that we've been in since February. So it's still relatively consolidative. I think it's mostly because the USDA numbers were pretty stagnant compared to what the private analysts were saying. So we're expecting that kind of news may come up down the road. Even the USDA did bump up the global stocks for corn, also putting a little bit more pressure on the market. On the option side, the May volatility was just under 30%. So that's still, it's come down some, but it's still relatively strong. But it's important also to keep an eye on the April options, and that volatility is about 25%. Now, we just remember that they expire on the Friday before March 31st, before that next acreage report. So that could be significant down the road. Also, in the December contract, we did see December really kind of moving sideways, and the market's still remaining strong, even on the option side. So there is perhaps some opportunities there. So something to be watching going forward. Wheat did slip today, giving back yesterday's gains. I think that the futures just continue to trade very choppy. Now, weather should be a little bit more positive for the winter wheat. However, if we do get some more cold weather down the road, then of course it becomes a negative. So we have all kinds of reasons why this market is just going back and forth. Also, the Australian crop was increased by 3 million metric tons, which is really 10% of what we originally thought. So I think that that's pretty much why that the option trade in the 665 calls was really the most active, and certainly above to where we are today. That just tells us everyone has an eye on maybe this higher market. We just have to watch to see what happens. In the end, wheat was more consolidative than really trending lower, even though the chart looks like it's really trying to slip somewhat. Now, notwithstanding what the USDA did kick the can down the road, we're looking now towards the March 31st planting intentions, which is definitely going to be the most next significant number that we're going to be watching. So it's going to be a lot to be trading against over the next couple of weeks.